Hello traders, welcome to the 5% Traders Academy and welcome to this 1 week free class on Forex trading. I still remain your coach Jeremiah Onwakeze. Before we begin today's class, I would like you guys to kindly subscribe to this channel and also hit the like button. So guys, please do that for me. Just hit the subscribe button and also hit the like button for this video. Alright guys, if you've done that, let's head over to the chat and begin today's topic. In this video class, I will be teaching on what is PIPS, and how to calculate it. That is the topic for this class. What is PIPS and how to calculate it? So I will also be teaching on what lot size means. Lot size, LOT SIZE. So I'll be teaching on what is PIPS, PIPS, that is the spelling of PIPS, and how to calculate it. And I would also be teaching on lot size. So over to PIPS. I'll start with PIPS. So PIPS is just a short form of percentage in profit. So traders usually calculate their profit in PIPS. Whenever the market moves from one particular price to another particular price, it is usually calculated in PIPS. Let me show you what I mean. So this is just an arrow. So for example, as you are seeing this price right here, so for example, the price moves from this place up to this place. If a trader wants to calculate what is the value of the movement, it is usually calculated in PIPS. So for example, you entered a buy position right here and the market then went up, the price went up in your direction of the buy trade. So if you are to calculate your profit, it is usually calculated in PIPS. That is why I said PIPS is percentage in profit. So let's go over to how to calculate PIPS. So PIPS is usually calculated using the last 2 or 3 digits of the price. As you can see, this currency pair we are looking at is Euro USD. Yes, it is Euro USD. It is written here. So this is Euro USD where my arrow is pointing at. So that is the pair I am currently looking at. So the current price of Euro USD, because this is a live chart, that is why you can see the price is changing from 402. You can see it might probably change to another number now, 401. So this is a live chart, that is why it is moving. So for example, okay, not for example, if you want to calculate a PIPS, a PIP is usually calculated using the last two or 3 digits of this price. So as you can see right here, Euro USD is currently 1.08403. So if Euro USD move from 1.08403 to maybe 1.08405, that is an upward increase. It means that the price moved in 2 pips. So if 405 changes to 408, it means that the price increased with 3 pips, because initially it was 405 and then it increased higher to 408. So if Euro USD go up by 3 pips, it means that the value of Euro USD increased by 3 pips. So for example, if Euro USD goes down, that is for example 407 now, which is currently 407, and Euro USD moves from 407 downwards to, for example, 404, it simply means that Euro USD dropped down with 3 pips. So I will still say more example on this. For example, as you can see, the last 3 digits is 408. 408 is the last 3 digits. Now, so for example, Euro USD moved from 408 to maybe probably 428. 408 to 428. If you want to have the value increase, if you want to know the value increase, that is the pips, all you have to do is just to press on your calculator 408 minus 428. You will see that what you will get is 20. So euro USD increased with 20 pips. So if you want to calculate the pips, it is usually the last two or last three digits of the current price with the last two or last three digits of the new price. Now I'll do another example so you can understand it better. So I will not be using the live chat now. I will not be using the live chat now. I want to use another price because the price currently is not stable because that is a live chat. So I want you to look at these two lines I am actually drawing. So as you can see here, I'm giving an example. For instance, the price of euro USD is currently 1.08702, and euro USD then increased from that price up to a new price to 1.08740. It simply means that if you want to calculate the pips, all you have to do is just can press on your calculator 740. You can press 740 minus 702 on your calculator. You find out that you will see 38 written there. So euro USD made an increase in value of 38 pips. So for example, if this euro USD at the current price of 1.08702, if the price moves from that price level down to let's say down to 1.08662, all you have to do is to press that on your calculator, and you find out that the amount you get is the increase or is the decrease in the value of pips. So if you press 702 minus 662, the value you will get is the value of pips that euro USD actually moved downwards to. So I'll be going to another currency pair. As you can see right here on the left hand side of my screen, there are so many currency pairs that I have here. So the first one is euro USD. Remember in the first video I told you there are so many currencies that you can trade in the forex market. So the first one, and probably I didn't mention it, whenever you want to trade in the forex market, two pairs are usually attached together. You don't just trade one pair. Remember, you don't just trade one currency. You don't just trade one foreign currency. Remember what I said in the first video. I gave an example of naira and dollar. You can't just say you want to exchange your naira and make profit. You always exchange your naira to another currency. And I remember I gave an example on how an individual can exchange his naira to dollar. So whenever you want to make a buy or sell transaction on the forex market, it is two pairs are usually paired together. Two currencies are usually paired together. So as you can see on my first watch list, you can see euro USD paired together. The second one you can see is GBP USD. The third one you can see is USD. That CHF simply means chef. It is the short form of Swiss francs. And the next one you can see is USD JPY. That USD JPY is US dollar and Japanese yen. Japanese yen is the foreign currency used in China. So there are so many foreign currencies here. So I'll just probably go to to GBP USD to still explain the value of pips, to still explain how pips works. So I've given another example right here on euro USD. So let's say for instance GBP USD is currently at this price level right here where I drew this blue line. So at this price level of 1.28906, let's assume that is the current price of euro. That is the current price of GBP USD. And so GBP USD then increased from that place and probably to to this place. So I'm giving an example. So there is an increase in the price, there's an increase in the value. Remember what I said, if you want to know the increase in price or increase in the value of a currency pair, it is usually calculated in pips, and that is the example I'm giving. So for example, there is an increase in price of euro US, sorry, don't mind me. For example, there is an increase in price of GBP USD from this price level of 1.28906 to this new price level of 1.28950. Now if you want to know the value of pips that GBP USD made an increase, because this is an increase, the value increased from here upward, but if the value move from here downwards, then there is a decrease in value. But as long as it is going up, it simply means the value is increasing, and when it starts coming down, it simply means that the value is dropping. So if we want to know the value increase of what happened right here, what we are going to be doing is that we'll press on our calculator and put, remember I said the last two or last three digits, so we can simply write 906 minus 950 on our calculator. You'll find out that what you will have there is 46. So it simply means that GBP USD have an increase in value of 46 pips. Okay, so for example, again, let's say GBP USD GBP USD dropped to let's say I'm trying to look for a perfect price that I can be able to calculate using my head. Okay, so let's say for example that GBP USD, the current price of GBP USD is this one right here, that is 1.28906, and we found out that GBP USD dropped in value, reduced in price from this particular price here down to 1.28876. remember what I said, you have to press it on your calculator. So then you find out that there has been a decrease in the value. Of, I think that is up to 60 pips if I'm not mistaken, or up to 70 pips. I think that's a 70 pips price movement. Okay, not 70 pips, sorry, that is I'm coming. Okay, that is a 30 pips price movement. If you should press that on your calculator, that is 906 minus 876, you'll find out that you actually have 30 on your calculator. So that is a downward price movement, but that is you can interpret it by saying that GBP USD has a reduced in value. Yes, a reduce in value or a reduce in price of 30 pips below. So basically that is how to calculate your pips. That is how to calculate pips. So whenever price move from year to year, it is usually calculated that way. So I'll be explaining lot size now, and after explaining lot size, I'll be joining the lot size. I'll be joining the knowledge of lot size and knowledge of pips to tell you how to calculate your profit and how to calculate your loss each time you make loss. I believe you all are actually getting value in this particular class. So over to lot size. Lot size simply means, sorry about that. Lot size simply means the amount of money you use to open a trade. For example, you want to buy GBP USD right now because the pair we are currently looking at is GBP USD. So for example, you want to place a buy on GBP USD. There is usually a little amount of money that traders usually use to either buy or sell. Now, the amount of money a trader uses to buy or sell is usually dependent on their account. When I get to the teaching on risk management, I'll be teaching you on how to manage your risks, because if you use, let me put it this way: the higher your lot size, the higher the amount of money you would make, and the higher the amount of loss you will make. And the lower your lot size, the lower the amount of profit you will make, and the lower the amount of loss you will make. So I'll still explain what I mean by that, but lot size is usually the amount of money a trader uses to open a buy or a sell, and the lot size is written right here. As you can see on the center of my screen, you can see 0.01 lot size. So the least lot size, the minimum amount of money a trader can use to open either a buy or a sell in the forex market is 0.01 cent. 0.01 cent. This 0.01, the value is in dollars, but it is not up to $1. That is why it is called cent. That is why it is called a cent. So a trader can also increase the value by tapping at this place right here. So a trader can tap there and find out that it can increase its value. And maybe, for example, if you want to trade with 0.02, you just have to tap here. You notice there have been an increase in the value. As you can see on the center of the screen, it is no longer 0.02, it is now 0.03. So if you tap here again, you'll see there is an increase: 0.04, 0.05, 0.06. It depends on the amount of lot size you want to use to enter a trade. And remember what I say: the amount of lot size, the size, your lot size. Remember what I said: lot size is the amount of money you use to enter a trade. So your lot size will be dependent on the size of your account. When I mean your size of account, it will be dependent on your capital. For example, if you have a small capital like $50, you are meant to be using a very small lot size, like 0.01. Remember, 0.01 is the least lot size. Why did I say you have to use a small lot size? Remember what I said: the higher your lot size, the higher the amount of money you will make, and the higher the amount of money you lose. And the lower your lot size, the lower the amount of money you make, and the lower the amount of profit, the lower the amount of loss you make. So when having a small account, what you should be doing is that you want to risk little. You are not into the forex market to gamble. Only those that gamble in the forex market are those, for example, maybe whenever they enter a trade, they are risking up to, maybe for example they have a $50 account. Gamblers, what gamblers will simply do, in a $50 account they will be risking, for example, $10 maybe is their risk, and their profit probably will be $20. That is not a very good way of trading the forex market. You can see that as gambling because of you are risking too much too much money in your account. For example, you risk that kind of money in your account and you lost 4 times in a row. It simply means that you have lost all your money, because if you lose $10 5 times, you see that you have lost your $50 capital. But when you start small with a little capital like $50, you should ensure that you are risking at least $2 to $3, $2, $3, $4 in every single trade. Now you might be wondering, how do I know how much I'm risking, and how do I know how much I will be getting? Before I move into that, I want to let you know that forex trading is about risk to reward. Risk to reward in the sense that there is what is called stop loss and there is what is called take profit. There's what is called stop loss and there's what is called take profit. Your stop loss, that is, which is also known as your risk, just simply means how much you are risking in a trade. Now, in forex trading, there's usually risk. Like I said, there is usually risk, there's usually reward. There are some traders that risk $2 so as to get $4, or so as to get $8, or so as to get $10. There are some traders, when they have a large size account, like some traders that have up to $1,000 account, you see such traders like risking $50 so as to get like $200, so or get like $150, or so as to get about $300 or more. So forex trading is all about risk and reward. You will always risk something in order to get an higher amount. So like I said, we will be using the lot size and the pips to calculate the value of your risk and the value of your reward. So guys, I'll be giving an example right now. I want you to pay very close attention. I want you to pay very close attention to what I want to do. So for example, right here now, remember I said there is what is called risk and there is what is called reward, and stop loss is also known as, okay, there is also what is called stop loss and take profit. I believe, let me explain it right now before I move to the example I want to make. So for example, after doing your analysis, remember I said we would be using this chart. This red and green stuff you are seeing right here is called candlesticks. It's called candlesticks, okay? So, and I said it is through these candlesticks you will use to forecast, you will use to determine if a currency is about to rise or about to fall. Okay, so there are times whereby you forecast that the price will rise, and you know when a price is about to rise, is about to increase in value, you buy it. I remember the example I gave in the first video, that when your friend come to tell you that dollar is about to rise against naira, and what you should do then is to sell your naira so as to buy dollar. So whenever you notice a currency is about to rise, all you have to do is to buy. Remember the example I gave, that when you buy and it finally increase in value, it simply means you make profit. But when you buy and instead of it to rise, instead of it to increase in value, it end up dropping, it simply means that you would make loss. So I want to give an example based on this thing. So for example, after doing your analysis, you observe that GBP USD is going to rise in the next maybe probably in the next 1 hour, in the next 2 hour, or in the next 3 hours, or in the next day, and you entered your buy around here. This place my arrow is pointing, you enter your buy around here. Now this is the place of your entry. This is your entry price because of you place your buy right here. Now for example, after doing your analysis, you expect that GBP USD will move from here, maybe probably to this place. So what you are going to do is that after you enter your buy right here, you will set a take profit. Sorry about this. You set a take profit to this place. Remember, you did an analysis that GBP USD will rise from here to this new price. So all you have to do is, firstly, you enter your buy right here because the price will rise up. So you enter your buy right here and you set your take profit here as your target. Your target simply means your take profit. Your take profit simply means your target. So I will teach you all on how to set take profit and stop loss. You don't have to worry about that. So after entering your buy right here, so remember I said these two icon, this red and blue stuff you are seeing on the top of my screen, this you can see buy right here, and you can see sell around here. So whenever after you've done your analysis and you are seeing that GBP USD will rise from this particular place, that the arrow is moving, all you have to do is just to click this buy area here. You just tap it once and you'll see that your broker will execute the trade. When I mean execute the trade, your trader will help you buy. Your broker will help you buy. Remember I explained on what a broker means and how they help you. If you've not watched the video, you can go over to the video and watch the video again. So guys, I'm still giving the example. So for example, you placed a buy right here, and as you can see, GBP USD is already going up and you're already in profit, and your target is right here. This take profit target simply means that a take profit simply means, okay, I'll give you a definition of what take profit means. A take profit is an order you give to your broker that whenever the price or whenever the market gets to this particular price level, close my trade for me in profit. Remember, you entered a buy right here, and whenever you enter a buy and the market begins to move in your direction, you begin to make profit. Understood? You begin to make profit. But whenever you enter a buy right here, and instead of the market to be going up, the market end up falling down, you begin to make loss. But I will still teach you on what stop loss means, because stop loss will help you to actually limit your loss. Stop loss will help you not to make too much loss. So I will still explain what that means. So I'm still explaining a take profit. So whenever you enter a buy and the price start moving in your direction and you set a take profit at a particular price level, this price level, it's a take profit is just like an order telling your broker that whenever price gets to this price level right here, either I'm online, that is either I am on the chart, or I am not online. Either my data is on, either I have internet connection, or either I don't have internet connection, either my phone is switched off or is on. Just whenever price gets to this particular price level, close my trade for me in profit. That is what a take profit simply means. So if you entered a buy right here and price moves from here up here, your broker will simply close the trade for you in profit. Either you are online or you are offline, or either your phone is switched on or switched off. So that is what a take profit simply means. Now over to stop loss. Remember I said in forex market there is profit and there is loss. So if you enter the buy right here and the price moves from here to this place, you will notice that when your broker closed the trade for you, your trade will close in profit, in profit, in profit. So but in a situation whereby you entered a buy here, and instead of the market to go up, the market start coming down, you will end up losing money because the market is not going in your direction. So if you place a buy right here, and instead of the market in line with my trade, please close the trade for me. When I mean in line with your trade, this is what I mean right here. When you place a buy right here, when the market starts to go up, it simply means that the price is going in line with your trade, that is in line with your forecast. Because initially, before you entered a buy here, you have a forecast in your mind that the price will increase up here. So whenever you enter a buy trade, whenever you have a forecast that the price will go up, but the price did not end up going up, instead the price start going down, it simply means that the price is going against you. And when the price start going against you, it also simply means that you will be making loss instead of profit. So a stop loss simply means that whenever the price start going against my direction, whenever price start going against my forecast, please help me close my trade in this particular price level, in this particular price level. So you might enter a buy right here, a buy right here, and you expect price to go up right here, but instead you start observing that price start coming down. So you might give your broker an instruction that immediately price, maybe probably you can tell your broker that immediately price gets to this price level of 1.28954, please close my trade for me, because of it is not going in my direction. My initial direction, the initial direction I want the price to go is up, so that I can make profit. But instead the price is no longer going up, the price is now coming down, and I am currently making loss. So it will just be an instruction that your broker should please help you close the trade at this particular price level. So that is simply how take profit and stop loss simply works. Your take profit is an instruction, that is an order, is an instruction that helps you close your trade whenever it is moving in profit and whenever it gets to your target, while your stop loss is an order you give to your broker that whenever the trade is not going in my direction, whenever the trade begins to go against my forecast, just help me close the trade at this price level, so that I will not make too much loss. Because if you entered a buy right here, and instead of the price going up, the price drop down here, you will make some loss. And if the price drops further, you make further loss. If the price drop further, you make even much more loss. That is if you don't have a stop loss. But if you have a stop loss and the price gets to the price level of your stop loss, as soon as price gets there, you will see that your broker will close your trade for you. And when your broker close your trade for you, you will not make further loss. It is also applicable in take profit. If you enter a buy right here and the price begins to go in your direction, you begin to make profit in your direction. If the price gets to your target right here and you didn't place a take profit, the market will continue to go up and you will continue to make profit. Do you understand? But as long as you set a take profit right here, your broker will close the trade for you in profit at your take profit. So this is basically how stop loss work, take profit work, and I've talked about lot size, and I've also talked about what's that again, pips. Yes, I've talked about pips. Now I told you I want to combine lot size and pips to determine how much profit you make or how much loss you would make. So guys, I believe I'm making sense with all I have said. So over to the lot size and profit. It is very lot size and pips. It is very important that you know your lot size and your pips will determine the amount of money and the amount of loss you make. If I enter a trade with a bigger lot size and my pips target is big, the amount of profit I'll be making will be different, will be higher compared to yours if your lot size is little and your pips target is small. Now let me explain. Let me give you a practical example of what I am saying. So for example guys, I would still give this example that I use right here. So remember, this is still the example. This is your entry right here, this is your stop loss right here, this is your take profit right here. So for example guys, this is where, sorry about that. Okay, so guys, this is where you placed your buy. I'm giving an example. So this is where you placed your buy right here, your buy. As you can see, your buy is in 0.01 lot size. That is the least amount, the minimum amount of lot size. Remember I said 0.01 lot size is the minimum amount of lot size. Okay, so for example, that is where you placed your buy trade. And your stop loss, this SL simply means stop loss. So your stop loss is at this place. Remember, it's still the same example I gave. Okay, it's still the same example I gave. And your take profit, don't know why this is doing this. Okay, oops, it's gone. I'm coming. So okay, back to the example. So for example, this is your place you place it. This is the area you placed your buy, and this is the area you placed your stop loss. And for your take profit, as I explained, this is the area you set your take profit. So guys, as you can see right here, now I'm trying to teach you how your lot size actually affect the amount of profit you make, and also affect the amount of loss you make. So guys, this is it. Remember what I said. For example, you entered a buy position, you entered a buy with 0.01 lot size. Okay, now your stop loss is at this region. You will notice that if this trade does not go in your direction, for example, this trade goes in your direction, you will make loss of 0.51 cents. That is less than $1. Remember what I said about forex trading. Forex trading is all about risks and reward. So for example, you entered a buy right here, your risk right here is 0.51. that is to say, if this trade does not go in your direction, you will end up losing $0.51 USD, as you can see here, US dollar. But if this trade should go in your direction, you will notice right here that your take profit is $2.56. So this is a very good trade. You enter the trade with 0.01 lot size and your risk is $0.51. That is a little risk. And your take profit, that is to say, if the price gets to your take profit, you will end up making $2.56. Now, why your stop loss and your take profit is this amount is because of the lot size you use. Remember, this is the area of lot size right here. This is the area of lot size. So imagine now, for example, I no longer used 0.01 lot size, I used 0.02 lot size. If you go over to your risks, your stop loss, you will notice that it has changed from 0.56 to $1.02 stop loss. And if you go over to your take profit, you'll notice that 2.50 something dollars that you will get if the trade goes in your direction has increased to $5.12. So the higher, what I'm trying to explain here is that the higher your lot size, the higher the amount of profit you would make, and also the higher the amount of loss you make. If I should increase this lot size now from 0.02 to 0.03, you'd see that your take profit and your stop loss has changed. Now your stop loss right now, that is your risk, is $1.53 and your take profit is now $7.68. So if I should increase my lot size to 0.04, you would see that my take profit has increased to $10.24 and my risk now is $2.04. So what I'm trying to say is that different traders in the forex market uses different lot size. So the higher your lot size, the higher your profit and the higher your loss. So if I use a different lot size and you as well use a different lot size in the same trade, we will not come out with the same amount of profit, or we will not come out with the same amount of loss, because of our lot size is quite different. Okay, it's quite different. Okay, so as you can see right here, you can see this point right here is indicating the amount of pips. So this is 51 pips right here. So this is 51 pips stop loss. Your stop loss is simply 51 pips, because if you should do the calculation, if you should do 951, or if you simply do 51, okay, let's leave that. So your stop loss right here is 51 points, that is 51 pips, and your take profit right here is 256 pips. So it still boils down to what I've been trying to say. Forex trading is all about risk and all about reward. So but you must ensure that your risk is little and your reward is high. That is, you must ensure that your stop loss is little and your take profit is high. As you can see right here, if I took this trade, you'll see that my risk, which is my stop loss, is just $2.04. That is, if the trade does not go in my direction, I'll end up losing $2.04. But if the trade then go in my direction, I'll end up making a profit of $10.24. So that is a very good trade. The risk is very little and the reward is massive. So this is basically how the forex market works. This is basically how to calculate pips. This is basically how to know your lot size, and this is how your lot size determines the amount of profit you actually make and the amount of loss a trader actually makes. So every trader in the forex market makes different amount of profit. Remember what I said, the amount of lot size you use will be determined will be will be determined on your account size. Will be determined on your account size. You cannot compare yourself. You cannot, for example, right now, you have a $10 capital. You have a $10 capital. Now, I would be expecting you that if you want to risk in every trade, you should not you should not risk more than $2. That is to say, if you are to take a trade like this, the highest lot size you should use is 0.04 lot size. Okay, 0.04 lot size. You cannot compare yourself with other persons that have, like, for example, a $50 account size, a $50 capital. Those kind of persons, they would be using a higher lot size, because those kind of person can probably use 0.14 lot size. 0.14 lot size, in the sense that when they use 0.14 lot size, as you can see, the risk has changed. So persons that have a $50 account, if he or she loses $7.14, the person might not really be annoyed, because of the person still have enough capital to trade. Okay, but you having a $10 account and you end up losing $7.14 account, you have lost over half of your account. You have lost over 50% of your account, which is a very bad trade. I call that gambling, because of you are risking almost your capital in a single trade. So that is not a wise way to trade. Okay, so the amount of lot size, your lot size determines the size of your account, determines your capital, Okay, so guys, we've come to the end of this class. So goodbye, guys. I expect you all to watch this video over and over again, gain more clarity, gain more understanding, so that you can become a pro in the forex market. So goodbye, guys. I will see you all in the next class.